it's a breakout. It's a breakout after many years of suppression. And, if you some people would say, well, these are too expensive. They have to come back down. And I would say, no, no, no. You need to compare them to the outstanding money that we've created. And, Brent Johnson has a great table that's actually in my book as well that shows that to fully back the dollar with gold, and this was a couple of years ago, at today's, and 100% backing, by the way, is not required to have a gold standard. You can run a gold standard at 20 to 40% backing, right? But if you wanted to 100% back the dollar, M2, with gold, you'd have to have $90,000 an ounce gold. Now, it's not there. It's at 3,500, and so I believe they have a lot of room to run. And people have asked me my outlook. I think we see 4,000 this year and probably 5 the next year, and I can clearly see up to 10, in the next, 5 to plus years. And with Bitcoin, I can kind of see, I think 140 this year and, higher following years. They'll probably be at some point, it'll get ahead of itself and we'll have a real, we'll have that 50% pullback that'll scare people. The last 4 years have been very instructive. If you held 20 or 30-year bonds, you've lost 30, 40, 50% of your purchasing power. And if you held gold, you're up 200% in bond terms. If you held Bitcoin, you're up 2,000% in bond terms. That's from the last 5 years, from 2020 to present. So that kind of a move, what you described with Lacey and the deflation, could there be a severe counter-trend move? Absolutely. Absolutely. And I think people have to be aware of that and prepared for that. And frankly, it's probably due to come because we're all feeling pretty giddy right now that we've been right. And so it could come at any time. But again, I just know where I think we'll go. And I see some things on the horizon that I think are very positive. We haven't talked at all about the Fed. And I don't want to get into all the, the Real Housewives of the Fed drama that's been going on. But we do know that Powell terms out in May of next year. And the Trump administration is aggressively campaigning for lower rates. And so I don't think we've broken the last inflation cycle. And I think we can almost be assured that starting in May of next year, we will have a very dovish Fed. And so I think that the sound money alternatives to the dollar, they can all smell that. And that's why they're doing what they're doing, right?
So do you think that's driving the recent action here? Is that people are thinking, oh, it's because we're going to have a dovish Fed that follows the president?
I think it's part of it. I think it's a combination of things. I think it's the Doge failed. I think it's the Liberty Caucus caved. What happened to the Liberty Caucus? Trump bullied all of them except for Massey and Rand Paul into basically accepting a huge increase in spending bill, right? The big beautiful bill came through. It's right. It's just, and then even Bessent pivoted when he said, hey, everyone was asking about Doge. He said, well, we've kind of changed our focus. Our focus now is on growth.
Remember he was talking about detox. We're going to have this period of detox.
Exactly.
And it was like, maybe not.
Maybe not. Maybe that's not such a good idea. Yeah. Let's focus on growth. And it's almost, and it's industrial policy like, and they've shown you that they're going to take the gloves off and do whatever it takes. Hey, Intel, guess what? We get to own a piece of you. To me, they're going to, I think the military has told them that this is existential shit, and that the bond market. I'll tell you another interesting thing. So I'm at the Bitcoin show in Las Vegas last year or early this year, and a guy who's very highly placed, and I checked him out. I did all the LinkedIn on him. In the defense establishment, 3-letter agencies, one of which was the NSA, came up to me and said, your book is burning up the halls of all these agencies. And I said,
really?
Yeah. I said, what the hell are you talking about? And he said, well, our job is to look at existential threats to the United States, and hyperinflation is one of them. And I've told everybody they got to read your book to understand the issue.
The U.S. Federal Reserve's monetary policy is undergoing a significant transformation. Chair Jerome Powell's term is set to conclude in May 2026. And the incoming administration is advocating for lower interest rates to stimulate economic growth. This dovish stance is expected to have profound implications for the dollar and traditional financial markets. As the Fed pivots towards growth-focused strategies, investors are closely monitoring the potential impact on inflation and the broader economy.
It is kind of stunning, and as he talked about, they're all neo-Keynesians, and there's nobody who's a neoclassicist like he is. It's... Look, there's a part of our government that's actually kind of smart. Borderline parts of it are evil as well. But at least, I know that Jason Lowery wrote something called Software, which is the strategic case for Bitcoin. And he told my partner, David Foley, that, look, the people that run the Pentagon, run the Defense Department, run the DOD, et cetera, they understand what the sound money, what Triffin's dilemma has done to this country. They understand the sound money thing. And I was trying to make that point earlier. I mean, it's an existential threat because, as we've now read, Adam, basically, we couldn't even go to war with China if we want to because they've got all the rare earths we need to build our weapons. I mean,
Right.
It's just like, whoa, how did that happen? Well, somebody wasn't paying attention, and that's and so Trump comes in with a very blunt instrument of tariffs, and he's swinging this axe around. But good God, somebody had to do it because the route we were on was literally towards becoming, just a vassal state of China, and that's not a good outcome.
Recent political developments have further complicated the economic landscape. The Trump administration's aggressive spending initiatives, including the One Big Beautiful Bill, have raised concerns about fiscal discipline. Despite resistance from fiscal conservatives, significant spending packages have been enacted, reflecting a shift towards expansive economic policies. These changes are influencing market expectations and investor behavior, particularly regarding the future value of the U.S. dollar and traditional investment vehicles.
I think they're certainly better than the alternative. I think they understand that sound money is important. I know Robert Kennedy understands it. Everyone should go listen to the Robert Kennedy speech at Bitcoin Nashville. It's an outstanding speech. He gets it.
When was that? When was that made?
It was not this year. It was probably 2024.
Okay.
Highly recommended. Besant gets it. I mean, Besant's an admitted gold bug.
Yeah.
Besant's positive on Bitcoin. Miran is positive on Bitcoin. I mean, I think they understand what unsound money has done to this country. I think they understand how Triffin's dilemma has hollowed out the manufacturing base. I mean, Besant said it, or J.D. Vance said it. Wall Street's been doing just fine. It's time for Main Street to win. And by the way, for that to occur, the bond market's got to die, and it's gonna die. I mean, they're gonna kill it, and they don't say they want a cheaper dollar, but they want a cheaper dollar. They want a serious dollar devaluation because that's necessary, in order to solve this imbalance that we've got that has put us in the position that we're in. So, I mean, I think they mean well. I think they're going in the right direction. I think they're trying hard. I think some of it has been ham-fisted. I think some of it is unrealistic. Obviously, Liberation Day was kind of, what happened on Liberation Day was fascinating to me, right? Because the bond market basically schooled Trump, right? We're going to do all these tariffs, and the bond market and the stock market, the bond market falls, stock market falls. And, well, maybe we're not. Maybe we're going to rethink that. and so, okay, but fine. So they adjusted. Okay, we'll put a 60. Was it a 60-day or a 90-day extension? I think it was 90, but they put an extension on when they went into effect, right? And
I'm trying to think if they did more than
I
just
can't remember what it
extension.
was. Somebody will put it in the show notes. But anyway, the bottom is they put an extension in, and the market recovered, so on and so forth. So I think their intent is right. They're kind of feeling their way around in the dark. I give them, who could get it perfectly right? I mean, it's 20 years of misadventure in the wrong direction. I mean, you can't fix it in a year. I mean, he hasn't even been there a year yet, right?
In response to perceived economic mismanagement, there is a growing movement towards sound money alternatives. Prominent figures, including Robert F. Kennedy Jr. and Senator J.D. Vance, are advocating for a return to asset-backed currencies. Proposals such as gold-backed treasury bonds and Bitcoin-integrated financial instruments are gaining traction. These initiatives aim to restore trust in the monetary system and provide a hedge against inflation and currency devaluation.
Yes, I do, and I think only because it's the Churchillian line of Americans do the right thing after we try everything else. I mean,
Yep.
I think the way this goes is that inflation becomes the problem of our age for the next 10 years, and at some point, enough politicians like Kennedy or Vance or others recognize that this is the core of the problem, and that we need to return to some form of sound money. And actually, chapter 26 in my book is the speech I would give as a president to how we do that and the reset we would need to do. And it's been done before. I mean, on a different scale, smaller, but with some different facts. Roosevelt did it in the 30s, in 33, grabbed all the gold and repriced gold to fight deflation. So,
Yep.
That could be done here. And there are many people who've described it. Judy Shelton has proposed, a gold-backed treasury bond. That would be one way to do it. You could also do a bit bond, which would be a treasury with some Bitcoin attached to it. I mean, but yes, we must, and we will. And just natural forces will cause us to drift back to sound money. which is not to say the dollar will necessarily disappear, but the dollar is going to have a lot of competitors. And certainly the bond market, I look at gold and Bitcoin as really reserve assets, not necessarily reserve currencies. And currency, as you know, has two pieces to it. It's a savings vehicle, it's a store of value vehicle, it's also a medium of exchange vehicle. Well, in today's world with technology, you can exchange one thing to another in a heartbeat. You got Venmo, PayPal, dollars, yen. It doesn't matter. The currencies will all be out there, for payments. But what people will be willing to hold that they trust will be gold, silver, and Bitcoin, in my view.
Okay.
And those will come center stage, and perhaps even to the point where I kind of dream and think in my book, and we're talking probably after I'm gone, we're talking 20 plus years out here. I actually believe my kids might be doing transactions of Satoshis, which is the smallest unit of one Bitcoin. So, and the dollar might be a thing of the past, and everybody might be saying, well, how could it be that you guys let 12 people in a market-based economy set something as important as the price of money?
All right.
We all know price fixing doesn't work, that the interest rate ought to balance the supply of savings against the demand for capital. That's what the interest rate should be. It should be set in the free market, full stop. But of course, what we have is a bank and government cartel that sets it. And that's why we have all these problems. Look at it, Adam. You have 0% interest rates, which makes everybody who can borrow wealthy, or you have 20% interest rates that almost banked my dad in 1980 when we were eating tuna fish sandwiches for dinner for weeks on end. It's just, it's just an up and down system that's very painful because it's run by a cartel that is, the banks and the governments.
Gold has emerged as a leading asset in the current economic environment. As of September 2025, gold prices have reached record highs, with forecasts predicting further gains. Analysts from institutions like J.P. Morgan and Citi anticipate gold prices could approach $4,000 per ounce by mid-2026. Factors contributing to this bullish outlook include expectations of continued Federal Reserve rate cuts, geopolitical uncertainties, and sustained central bank demand. Investors are increasingly viewing gold as a safe haven amidst economic volatility.
It's a breakout. It's a breakout after many years of suppression. And, if you some people would say, well, these are too expensive, they have to come back down. And I would say, no. You need to compare them to the outstanding money that we've created. And, Brent Johnson has a great table that's actually in my book as well that shows that to fully back the dollar with gold, and this was a couple of years ago, at today's, and 100% backing, by the way, is not required to have a gold standard. You can run a gold standard at 20 to 40% backing, right? But if you wanted to 100% back the dollar, M2, with gold, you'd have to have $90,000 an ounce gold. Now, it's not there. It's at 3,500. And so I believe they have a lot of room to run. And people have asked me my outlook. I think we see 4,000 this year and probably 5 the next year. And I can clearly see up to 10, in the next, 5 to plus years. And with Bitcoin, I can kind of see, I think 140 this year and, higher following years. They'll probably be at some point, it'll get ahead of itself and we'll have a real, we'll have that 50% pullback that'll scare people. But in, 20, 30 plus, I think Bitcoin's $1 million a coin. I said that at New Orleans, I think it was last year, and a lot of people guffawed and made fun of me and argued with me and this, that, and the other. But once you really kind of dig into what it is, which is to say, it's the first commodity that can't be manufactured beyond its limit. So every other, so we've never really seen anything like Bitcoin before. I think people have to get their head around that. There has never been something like this. There's never been a financial thing with a fixed supply, ever. Gold grows at 170 a year. In 40 years, we'll have twice as much gold on this planet. In 40 years, there'll still only be 21 million Bitcoin, right? So wrapping your head around that is why it can just keep going for a very long time, and I think it will.
Bitcoin continues to distinguish itself as a digital asset with unique characteristics. With a fixed supply capped at 21 million coins, Bitcoin is immune to inflationary pressures that affect traditional currencies. Its decentralized nature and growing acceptance as a store of value position it as a potential cornerstone of future financial systems. While volatility remains a consideration, Bitcoin's long-term trajectory suggests it could play a pivotal role in the evolution of global finance.
It has to do with the network effect of what people adopt as money. And so, and don't get me wrong, I accept that as a risk. It is one of the risks, okay? It's not like a zero probability risk, okay? But a good analog to that might be, well, okay, how about tomorrow somebody's going to make a better Amazon, right? They're going to have all the things for sale, all the people buying there, all the usage of it, et cetera. It's going to emerge. It's going to have some feature that causes it to make Amazon die, and it's going to win. I mean, in other words, there's a, it's called Metcalfe's law. There's a network effect here that's in place where, it would take something substantially better to cause people to migrate off of this network and onto a better network.